Hi, my name's Craig Vaughan from Map Home Loans. Welcome to a short 10 to 12 minute presentation on how to get your home loan approved whilst living overseas. Map Home Loans, quickly about us, we're experts in helping anyone with a residency issue, including Australian citizens living abroad, also known as Australian expats, arrange a home loan approval even without a 20% deposit. What we're going to cover today in this video is firstly the criteria the banks consider when deciding to approve or otherwise your home loan. We're also going to look at how you can get a home loan approved as an Australian expat living overseas with only a 5 to 10% deposit. Further, we'll look at the process of buying property in Australia whilst living overseas, briefly cover that. We'll shatter 3 misconceptions around buying property and getting a home loan, 3 things you may have heard when dealing directly with the banks, and the final thing we'll look at is what are the next steps for you in achieving your next purchase or your first purchase here in Australia. So turning first to the criteria that the banks look for when looking to approve your home loan. There are 4 key ones. You've got to have sufficient income, you've got to be living and earning in an acceptable currency and country, you need clean credit and deposit. There are deposit and genuine savings requirements. If we turn first to income, income is, obviously it goes without saying you need to have sufficient income to afford the repayments. Income though is a big one for expats because you'll all be earning in a different currency. You might be earning the dirham or a British pound, Singapore dollar, whatever you might be earning. And different banks will have different policies around which tax rates are applied. There are 2 ways it's done. You're either going to apply Australian tax to your income, or you're going to apply the tax of the country you're living in and earning and of the currency you're living in. So for example, if you're living in United Kingdom, we would either be applying UK tax to your income and working out your income after that, or applying Australian tax to your income. UK actually, the tax rates are rather similar really, but for someone living in Dubai, for example, tax rates obviously is 0 there, and therefore which tax rate you would apply would make a big difference to your borrowing capacity. Just to elaborate on that, because I know it sounds really weird, why would we apply Australian tax rates to overseas income? Look, it's not actually that you're applying the tax, you're not paying the tax, but that some of the banks in Australia don't understand overseas tax regimes, don't get it. So what they will do is, rather than try and work out what overseas tax is, how much it is and all that sort of thing, they'll just apply Australian tax. And if you can afford the repayments when applying Australian tax to your income, then they will still lend you the money. Most lenders will also build in a fluctuation or a buffer for exchange rates. So they normally, some will build in a 10% buffer, 20% buffer, and how they do that is if your income is, say, converted to Australian dollars, 100,000 Australian dollars, they will only use 80,000 of your income or 90,000 of your income. They'll build in a buffer there of 10 to 20% to ensure that if currency rates go against you, you can still afford the repayments on the reduced income. The other criteria we look at is country and currency. Every lender that will lend to Australian expats living abroad will have either a list of acceptable currencies or a list of countries that they will lend to. And obviously UK, UAE is fine, but currencies is an interesting one. You can be living in, for example, the UAE, United Arab Emirates. You could be earning the dirham and a bank won't lend to you. But if you're earning the US dollar, that same bank will lend to you. A little bit silly given that the dirham is pegged to the US dollar, but these are the rules. As silly as they are, these are the rules. And they're quite complicated. So when working out things like income and the tax rates to apply, as well as doing the currency conversions and also working out if you're earning an acceptable currency, it can get a little bit messy, and it's why a lot of young players might get it wrong. Some banks will limit by country as well, and just an example there, I've mentioned that Taiwan would be one of those. Russia would be another. There's a few countries they would not lend to if you're living in those countries. We have developed a non-resident calculator. You can go to the link on the website there. You can enter a little bit of information around your currency you're earning, the deposit you have, the purchase price, and things like that, and it will give you an idea whether 90% or 95% is available to you. So just to be clear about that, the currency you're earning can impact on the amount of deposit you require. For example, US dollar, probably get 95%. If you're earning the dirham, you might only be able to get 90% or more, maybe less than that. Turning now to the third requirement, which is clean credit. You do need to have clean credit within Australia. Your overseas credit file is not checked. However, sometimes you will be required to provide bank statements and credit card statements and things like that from overseas to confirm that you are a good credit risk to the bank. Finally, the fourth criteria is deposit and genuine savings requirements, and this is sort of where we spend a lot of our time working out, because most of our clients are looking to get 80 or 85 and 90%, and therefore we need to work out what sort of deposit you do need. So looking firstly at how much deposit you require four things. You need enough of your own deposit, you need enough for stamp duty, you may need to pay lender's mortgage insurance, and you also need enough for miscellaneous costs like solicitor, building and pest, and things like that. So looking first at the deposit required. If you're looking to buy a property at $500,000 and the bank has stipulated, and it will help you work out obviously the maximum LVR available to you, but let's presume for this current example that the maximum LVR for you was 90%. So if you're going to borrow 90%, the bank will lend you $450,000, being 90% of $500,000. Therefore, the client equity or deposit that you need to put in is the difference, in this case $50,000. Again, you can look at the calculator there and it'll give you an idea of the maximum LVR available to you. On top of your deposit of $50,000 or 10%, you then require stamp duty. Stamp duty is a one-off fee paid to the government on a transfer of land or the sale of a home. We've got a calculator there on our website. You can go to that calculator, you can select the state you're looking to buy in, you can type in the value of the purchase price, and it will tell you exactly how much the total government fees are payable by you. In this case, that would be $18,296 on a $500,000 purchase in New South Wales. On top of stamp duty and your deposit, you may also require lender's mortgage insurance. Lender's mortgage insurance is, look, I won't go into the detail about how that works, but there is a link there where you can read a bit more about that and why you pay it. Effectively, you pay lender's mortgage insurance when you do not have a 20% deposit or do not have a guarantor. It's not expat specific. Anyone who does not have a 20% deposit or a guarantor will pay lender's mortgage insurance. How much does it cost? We'll just use an example here. It is a sliding scale. The more deposit you have, the cheaper it is. The smaller deposit you have, the more expensive it is. So it does vary. And in this case, we're going to use an example: $450,000. The premium might be 1.6%, so the total amount would be $7,200. So if we summarise, final point 4. On top of deposit, stamp duty, and lender's mortgage insurance, you also require sufficient funds for everything else. Everything else being conveyancing or solicitors or a settlement agent, effectively the person that handles your legal part of the purchase. They're normally about $1,100, $1,200, something like that. On top of that, you need to pay for building and pest inspection if you want one of those done, and then everything else: council rates, adjustments, bank checks and settlement, and things like that. Generally, if you allow $2,500 for all of these things, you will have some money left over. So if we summarise that example, $500,000 purchase in New South Wales at 90%, you need 10%, $50,000, stamp duty is $18,296, mortgage insurance was $7,200, and for everything else about $2,500. In total, $77,996 is what you would need. There are options at 95%. You may have a bigger deposit and therefore only need 85 or 80%. That gives you an idea though how it works. As I've bolded there in red, sometimes the mortgage insurance can go on top of the loan. That is, you wouldn't need to pay that up front. So we'll talk about that when you're ready to move forward. Looking briefly at the process. So as an Australian expat living abroad, the most important step for you really is getting a fully verified pre-approval. So we get a fully verified approval. All documents, income, liability documents, ID, everything is provided to a lender up front, a lender bank up front, and they would give you a letter confirming the approval, and that would last for 3 to 6 months. Compare that to an approval that is not fully verified. Some lenders would give you an approval within half an hour or a day. The letter says, subject to the bank checking your application meets their policy. That is not a verified pre-approval, and the issue with that is obvious. You come to find the property you buy. You may have even travelled to Australia specifically to, search and find a property to buy. You arrive here, you find one to buy, you make your offer, you then fly back home and you find out that the bank's actually declined the loan. nothing could be worse. So always get a fully verified pre-approval, and we always advocate for fully verified pre-approvals in the first place. Once you've got your pre-approval sorted, that lasts for 3 to 6 months, you then go and make an offer and sign a contract on a property. Note, you don't actually need to come to Australia to do that. You can do that all remotely if you need to. Once you've made your offer and your offer's been accepted and your finance has been fully approved, you then would get the keys keys and become an investment property in normally 30 to 45 days thereafter. Just looking at some misconceptions out there. The first one, I guess, is we always get asked, are the interest rates high or fees high because you're an Australian expat living overseas? Absolutely not. Interest rates are very good, very competitive. It's only a policy issue. So most lenders will not lend above 80%. Most lenders won't lend to you at all, actually. We have some specific and semi-exclusive arrangements where we can get you 90 and 95. It obviously depends on your situation, and we need to go through the policy with you. But certainly interest rates and fees are standard and would be no cheaper if you were in Australia. If you've been told you need a 20% deposit, sure. Look, a lot of banks do require 20% deposit. You can get away with only a 5 or 10% deposit, providing you're earning an acceptable currency and also living in an acceptable country and earning sufficient income and so on. And do you need to come to Australia to purchase a home and arrange finance? No, you don't. You can do everything abroad. Obviously, there's some practicality issues with that as far as how do you actually find the property you want to buy. Some people would use their friends and family to search. You might do a short list on realestate.com or Domain and then get your friends to go and look at the property for you. You may use a buyer's agent, pay someone a fee to actually find you a suitable property for you. Or what a lot of people do is they would fly home for the 6 weeks at either in the middle of the year or the end of the year, depending on when your big break is, fly home and come home with a short list of properties armed with a pre-approval and spend a couple of weeks with your family while also looking for your investment property. But you don't actually need to be in Australia for this. We would post you the mortgage documents overseas. Everything can be done initially via email and fax and phone. And anything that's required in original would be posted to you via international courier to your home country. So looking at your next steps, where do you go from here? Depends on where you're up to in the process. If you're very much just, look, I think I might like to buy something in Australia maybe sometime in the future, well, look, download a copy of the free report on our website. You can also purchase a copy of my book called Buying Property in Australia, A Guide for Non-Residents, and you can get that delivered to any country in the world. If you're looking to buy within the next 3 to 6 months, so you're thinking, look, I'm going to come home this holidays or you're really committed, then book in a strategy session with us. Give us a call on that number there. We do offer Australia-wide services. Finally, if you have actually found a home and or made an offer, give us a call straight away or drop us a strategy session booking, and just note that your request is urgent. So that, depending on where you are in the process and where you are on your purchase, will dictate what you should do next. I mentioned there that we wrote a book. I wrote a book called Buying Property in Australia, A Guide for Non-Residents. It is a hard copy book. You can also get a Kindle version on Amazon.com as well. Just looking at what some previous clients have said about us and our services, we do assist a lot of clients who have already approached their own bank or another mortgage broker or something like that and been told they need a 20% deposit, or maybe have just found it really difficult to deal with them directly given you're overseas. So we try and bridge that gap. We're always available. We work outside of normal working hours. We understand you're overseas in different time zones, and we therefore look to try and manage your entire process to make it as easy as possible for you. Really, if you just did what we asked, we would join the dots for you. Daniel Rosa was in Singapore. He bought a property in the Northern Territory and he was approved at 90%. He actually bought very well, and within 1 year he would increase his equity by $100,000. So he's very, very happy, as anyone would be. Janine and Penny were a couple of expat teachers in Dubai, and they had approached another bank, I believe, and another mortgage broker, and had some issues. Found us, we had them approved within a week, and they were approved to buy a nice big block of land, and I think they're going to make it into some sort of hobby farm or something like that. But certainly they were very happy, and it was a big step for them to have something ready when they did move back to Australia sometime in the future. And just one more final one. Eliza, she bought a property in Sydney. She was actually living in Australia at the time, but she was earning an overseas income. So we had these complications around expats' overseas income whilst living in Australia, and so on. So she was employed by a UK company, but presently residing in Australia, and we got her approved. We use a guarantor in that situation, and she didn't require any deposit of her own. Thanks for listening, and I hope this has been helpful to you and provided some tips and some advice around what the next steps are and whether you may be able to be approved or otherwise. Look, inquire online at maphomeloans.com.au, purchase a copy of the book via Kindle or a paper version as well. Give us a call on 31712028 plus 617. We do offer Australian and worldwide services, so it doesn't matter what state you're buying in or where you live in the world, we can still assist you, providing you're able to get us the appropriate documents and so on. Craig Vaughan here from Map Home Loans. Thanks for your time. Look forward to talking to you soon. Bye.